Here we go. Good afternoon, everyone, and thanks for coming today. It is Wednesday, the second day of October 2024, doing our weekly Wednesday meeting, Target View Trades meeting. Let me start out as I always do, just showing you how to get the free trial and all that stuff. I'll show you a few more things. Now, if you're in here, you're taking the free trial and you're just trading stocks or trading equities or like ETFs or something like that, you don't need to pay extra for real-time data. The data comes with TradingView. But if, however, you do need real-time data because you're trading futures, you got to pay extra for that. I'll show you how to do all that in just a second. But if you haven't taken a free trial with us, go here to tvtrades.com. tvtrades.com. You can click on any one of these things that said start your 3 free day trial. It's going to bring you down here. There's $25 a week for that one, $90 a month, or $9.97 a year. $9.97 a year is becoming a popular thing, it seems. Typically, people will start out with the weekly and then go to the monthly, and then eventually from the monthly to the annual. And that's what's been happening a lot lately. And that's all good. It's all good. I get that you want to see if there's value, so you start out with the weekly, and then once you do see there's value, you see there's a discount for the monthly, and then once you see, a few months of that, you see, well, there's even a bigger discount for the annual. I get it all. You can do whatever you want, start however you want, do whatever you want. You do need to have TradingView charts. You do need to have TradingView charts to be able to do this. So if you don't have TradingView charts, you can go right here. This is on tvtrades.com, but I'll go to the Target View Trade site as well. All right, this is on tvtrades.com. If you go right down here, it says right here, click this link. All right, they're only available on TradingView charting platform. If you don't have TradingView charts yet, take a free trial at this link. It's going to take you to this page where it says, if I were logged off over here, if I were logged off right here, it would say $0 forever. Sign up, and that will do. Now, when you do that, they're going to assign you an ID. They're going to give you a TradingView login ID. Okay. When you get that TradingView login ID, I guess I'll just sign in as this guy. When you get that TradingView login ID, you need to give that to me, right? Because once I get that, then I can enable everything for you. All right. The other thing I was going to show you is if you, let's go backwards on this. There we go. Okay. If you do need to get data, now once you get your charts, you can go here to targetviewtrades.com, click on setup right here. It'll be in an email. Click on setup right here, and to get real-time data, in the first 2 minutes of this video, it tells how to get real-time data. But all you need to do to get real-time data is go to your charting platform, go here, go to accounts and billing, click on that. Let me hit cancel on that and save on this for a second. Okay, go here, go to accounts and billing, and what you need is this one. There's a package that you need at $7 a month. This one right here. It's $7.60 for me because I pay tax. Well, this one here, this account is in Phoenix, so this account pays tax on it. My account in North Carolina does not pay tax on it. But $7.60 a month for the real-time data for the futures. If you're going to trade futures, you need to have that. You can't do it without that. All right, it's well worth it. All right, so I want to answer your questions. All right, I want to answer everybody's questions. So if you have questions, then be sure and type them in, and I will answer them as soon as I can. Yes, Wayne, I do feel better. I had COVID last week, and I got it. I didn't have it too bad on Wednesday when I did the meeting on Wednesday last week. It had just started then, but then I had it full on Thursday. But then one of our guys gave me a 24-hour cure, and I'll be darned if I wasn't feeling good Friday night. So for those of you guys who want to know, that 24-hour cure was a 21 milligram nicotine patch. I had it on for about 6 hours, made me throw up, made me feel sick as a dog, but I took it off after 6 hours, and 12 hours later I was feeling so much better. That was my COVID cure. Right? It might not work for everybody, but it worked for me. Anyway, back to this stuff. So I want to go over in a lot of detail the TV trades range trigger, and this thing right here was from a meeting that I had last night with one of our people last night, and I was explaining something, and this James K is what you're going to be interested in, I think. When I get into this and how I was using this to trade options. And if you guys remember that meeting that we had last week, I think it ended with sorry, it's this one. To see the last webinars, by the way, if you want to see last week's webinars, they're right here on targetviewtrades.com, upcoming and past webinars. Like, I have everything all set up for next week's webinar already. So all I have to do is hit publish on the website, and you'll be able to find next week's webinar in here in about 2 hours. It'll be right here. But last week's webinar, we ended with this. I drew this in right here, and I said I expect it's going to get up to this prior swing high right here, and then eventually get over to here if it breaks through the prior swing high. Well, it didn't make it through the prior swing high, but it did make it to the prior swing high. Actually, it did make it through the prior swing high. Now that I think about it, it made it up to almost up to here. It made it almost up to there, but then it came back down. But this was 35 cents, and the following day, the following morning, it was 89 cents. All right, and that happens a lot. So I don't know if you guys remember that from last week, but that happens a lot, and it happened again last night. And I'll show you again. I'll show you how to see this. This is part of the lesson plan for today. Part of the TV trades range trigger stuff that I want to go over with you guys today. So hopefully I'm going to get into the meat of what I really want to show you. But this was from last week. The day after that, you had more than 100% gain. There was one last night that I said look for a 50% gain on, or look for it to get from. It was from $3. It wasn't 50%. It was like 30% or 25%. Get from $3 to $4 last night. And I'll explain all that and show you all that in a minute. But yeah, I wanted to show you all of this. Now, let's go through what I've shown you already in the first 7 minutes. All right. How to take the trial. Go to tvtrades.com, take the trial from there. How to sign up for the charts. Go to Target View Trades. Go to tradingview.com and sign up for the charts there. If you need real-time data for futures trading, you go here. Go to setup and follow the video. Right, this is targetviewtrades.com. Go to the setup right here. Watch the video. The video shows you how to get it. I showed you how to get it by going here and here to accounts and billing and to get it through there. The video has that all in there too. Okay, so those are the things that I've shown you so far. So now I've gone back to show you that little bit from last week. This is how we ended the meeting last week, and the next morning we had 100% gain on that. Hopefully I'll be able to do that again for you today, going into tomorrow. Okay, but that'll make these meetings worth coming to, wouldn't it? If I could give you 100% gain every Wednesday, that would make it worth it. Yeah, for a free meeting. Yeah, so I wanted to cover some other things that came in emails. All right. Now, a lot of you guys know what I do regularly, right? You know what I do, what I've been doing every day for, a lot of you guys have been with me for the last 15 years. But some of you guys don't, all right? And so when I show this spreadsheet right here of the stuff that I do in the morning, this is the stuff that I do in the morning. This is not TV trades, all right? What's the difference, you might ask? Well, in this, I'm teaching people how to trade. All right. There was one thing that asked if I would do one-on-one training with the TV trades, the one-on-one training. This meeting here is kind of a one-on-one training. If you really want one-on-one training, get in touch with me and I'll work with you as much as I can. But that's not really where I want to be. This product right here, this is Trading IQ, mytradingiq.com. This we teach you how to trade. All right. And these results that are here, the comment was, well, one of the comments anyway was, if I'm sitting here at the computer for 2 hours, or if I'm sitting at the computer for 8 hours, whether I'm trading or not, I have the charts running and there's trades triggering, so I should count all 8 hours. No, that's not true at all. But what I will say is this. I think there was a misunderstanding when I go to the hourly stuff down here, when I'm talking about this hourly rate down here. What this hourly rate means is when I start this room in the morning that I do this stuff in, this training, I'm just going to explain this. This doesn't have anything to do with TV trades, but I just want to clarify this because I do show this every now and then. But I just want to clarify. The times that are in here to create this hourly rate, that is the time from the moment that I sit down and I start the room in the morning. The moment that I start talking in the room, from that minute that I start talking in the room until I achieve my goal for the day. Alright? It's got nothing to do with how many trades I take or any of that stuff. It's from then until I get the goal for the day. And so like today, it took 5 minutes. From the time I sat down to the time I got the goal was 5 minutes. Yesterday, 4 minutes. The time I sat down to the time I got the goal. The day before that, you can go through them all. All the way back 10 years. More than 10 years. Almost 12 years now. You can go back and see. That's how long it took me to get the goal for the day. That's what this hourly rate is based on. Alright? The number of minutes I spent getting the goal for the day, and the amount of money, gross, not net, gross amount of money that was made getting the goal for the day. Alright? I don't say that, if I were to say I sat there for, I do have the room for 2 hours every morning, but I don't trade the full 2 hours every morning. But let's just say you were to do this, like we had 185 business days so far this year. I got the goal on every single business day so far this year. Let's say, with the money that I made, the $89,275 with one contract in the room over 185 days, and let's just do the math, alright? 185 times 2 hours, the room is 2 hours long, so it's 370 hours. So what is that? 89,275 divided by 370. $241 an hour is what it comes up to. Alright? That's the truth of what happened in there. If I were saying I traded for those full 2 hours, which I didn't, and this is the amount of money with one contract that I was making, then $240 an hour, that's nothing, that's not bad at all. $241 an hour with one contract, that's pretty good money, I would think, right? Isn't that pretty good money? $241 now, that's $500,000 a year. That's pretty good money for trading 2 hours a day with one contract. But that's not what I'm saying. What this is saying, this number down here, the $2,538, is the amount of money that was made and the amount of money that I traded. Alright? So it took 5 minutes to make $1,000 with today was 10 contracts. Today and yesterday I moved to 10 contracts for the 10th month. So it was, with 10 contracts on, it was 5 minutes to make $1,000. So 5 minutes, $1,000. It's $200 a minute. That's a lot more than $240 an hour. But you have to look at it in context. You have to put it in perspective. And the way that email came across was that I was not doing that. I was trying to exaggerate things, and I'm not trying to exaggerate anything. I just want to make sure you all understand. When you're looking at this, that's what it refers to. This whole 24/20 blueprint thing is to work your way up to 20 contracts. 20 contracts over 24 months. And I did do that. Starting January 1st, or January first business day of January of 2023, I worked my way up to 20 contracts, adding one contract a month. And I averaged $7,521 an hour doing that. Okay? And I did that in front of people. That's not stuff I'm making up. And again, this isn't TV trades either. Now, I'm going to show you what it is because it's using the same, I'll show you what it is, alright? But it's not the same thing as what TV trades is. TV trades just gives you signals that you can take if you want to take them. Should you choose to take them, you can take them. There was another thing that it almost alluded to me skipping over stop outs and if there's like a +5 and a +5 and a -5, a -5 and a -5 and then a +10, that I only cover the +10, and at the end of that you're actually -5. Well, of course you're actually -5. I don't do that, and you shouldn't be taking 3 -5s in a row ever. And who does a -5? I don't have a single stop out. That I know that's just an example, but I don't have a single stop that is only going to be 5 ticks. I don't. I actually spell everything out in writing right here. And I actually submitted this to you guys last week in the email that goes out at the end of this. this is what my stops are. For the range bars that I use, these are what the stops are, right? A 36 stop, a 25 stop, a 20 stop, a 15 stop, a 10 stop, and an 8 stop. None of those are 5. And my stops never go to -5. They're either at this, or they're break even, or they're plus some number. Alright, now I don't go into risk management in here much, okay, because everybody does their risk management a little bit different. And when you look at this stuff in here, it gives you the entry, and it gives you the stop, and it gives you target numbers. Now, when I created this, right, you have to think about it from a creator's perspective. And, I've been doing this for a long time, and I've trained thousands of people. And I know that if I don't give something solid, then everybody's going to have a different twist. Alright? So I give something solid. I give you a solid stop. What is that stop based on? It's based upon the bar before the trigger bar. Alright? Now, is that the stop that I use personally all the time? No, it's not. The stop that I use personally is right here. The one that I do in front of everybody every day. This is the stop that I do every day in front of everybody. Alright? And these stops in here, they're there because people need to have a specific number to put the stop at. Alright? It's easy for you to say, this is the number. And when you're trading with range bars, it's easy to have a really specific number like I do with all those numbers there. My stop's being 36, my stop's being 25 or whatever. It's easy to have a specific number for that. But when you go into equities like the QQQ, you can't just say, well, I'm going to have well, you can. If you're doing range bars, you can say I'm going to have a 20 tick stop. But if you're doing on a 30-minute chart, you can't say you're going to have, a 20-cent stop. You got to look at the prior swing high or low. And that's what it does. It looks at the prior swing high or low being the most recent bar that got you into the trade. Okay? So the stop in here is a good suggestion, and it will keep you in the trade most of the time. Now, there was another thing that came, and this goes to the risk management a little bit. And I'm going to get into this a little bit too when I start doing the next part of this. But but thanks, Wayne. Yes, I am the last person that is going to exaggerate the things. I do not lose my objectivity. That was one of the statements, that I've lost my objectivity, and I'm skipping over things, and the numbers up here don't really match what's on the chart, because by the time the numbers are up here, it's already moved on the chart. There's only so much I can do, but if you're using range bars, the reason that I prefer range bars, the reason that I like range bars, is because you can be proactive with your trade. Alright? If you know that a trade is coming up, if you look down here and you know that a trade is coming up on the next bar, you can put your order on ahead of time. Get your order there, have it waiting, and be ready to go. Alright? With TV trades, you don't always know that that's going to be a trigger. You don't always know that. But if you're using the sniper, one of the things in the sniper is this guy right here, the snipe alert notice. And what that does, let me blow this up for you so you understand a little bit better. What that does is it gives you an indication before you actually get the snipe alert, right? Or even the aggressive snipe alert. Before you get that, it gives you an indication. What this is telling you is that you're going to have a trade going in that direction. More than likely, you're going to have a trade coming up soon that's going to go in that direction. The actual alert text says the next up close. If it's going up, it says the next up close is what the alert text says. Alright? Now, whether that is an actual alert is not always the case. Alright? It's not always the case. What triggers this is when this goes into the oversold. Alright? When this goes down here into the oversold is what says, get ready, because you're going to have a trade coming up. And this is important that you understand this, because the next thing that I'm going to tell you, which is another really important thing, builds on this. Alright? So when this goes into the oversold, on whatever time frame you're on, this is the QQQ on a 250 range, right? So we're doing ETFs right here. QQQ on a 250 range. When this goes into the oversold, it's saying get ready, because the next up close is likely going to be an entry point. Now, you may get the purple arrow there. If you're using the sniper, it may give you the entry point. It may not. There's other things that it looks at to determine whether it's a good entry point or not. And so sometimes you just won't get it. Like right here, it didn't give it to you. Right here it did, right there it did, right there it did, right there it did, right there it did. Every one of those was an okay trade. Okay? But sometimes it's not going to give it to you because something doesn't work out. Like that one right there, which would have stopped you out. Right? So it's important that you understand that as well. And the information that comes up here, if you're using range bars, okay, if you are using range bars do not update intra-bar. So the bar has to close. It has to close to trigger any kind of an arrow or anything like that. It's got to close. That's when all the math is done. When the bar is closed, it's bam, the math can be done. And it triggers the arrow if it's got an arrow. Alright? Or if it's got whatever. If it's going to have any kind of a signal, it's going to do it when the bar is closed. Now, I have all these other things, all these alerts that we have in here to let you know that it's likely going to be happening, right? So you can get ready for that. But the way that TradingView charts are, the way that they create their range bars, they create them for 1 minute bars. So they do not allow you to do intra-bar updates with range bars, okay? It's one of the few bars that they do not allow that on, but they do not allow it with range bars. If you put this on a 5-minute bar, or even a 1 minute, look at the difference when, hang on. You see here how the blue is on top of the blue? The current bar is on top of the blue in the background. That's because it's already determined that the background is going to be blue right now. Alright, so right now you see you got this yellow right here. That can go away. See, it just did. It can go away. Alright. That's because it's doing intra-bar updates right here. But when you're back here on this range bar, you see how there's no color behind this current bar? That's because it's not doing intra-bar updates. So the updates happen when the bar closes. So nothing shows up and then goes away. And when it does show up and it gives you the signal, that's the real signal. Alright? It's not some false signal. It doesn't go away afterward. And if you can't get into the trade, if you're not ready to get into the trade when you get the signal, well, that's on you. I'm sorry, that sounds kind of mean. Let me explain why you should be ready, rather than saying it that way. I'm sorry. Do I have some anger in my voice? Is that coming through? I'm sorry. But the reason I use range bars is so that you can be ready. Okay. So I know that this bar is a 250 range bar. So it's $2.50 a bar. The bottom of this bar is right here at 81. So the top is going to be where? $2.50 higher, right? Right? 83.50. That's where the top's going to be. 83.50. It's not there yet, but it's going to be there. So if I want to go long on an up close, if I know that this is going to be a trade on an up close, then where am I going to put my buy stop limit order? 83.51. So it's because the bar's got to close. It's got to actually close to get to 83.51. Alright? I mean, you can put it 83.60 or something like that, but you can be that precise with range bars because it has to go to 83.50, 83.50, well, 83.51 to close the bar. Okay? You have to be that precise. Alright? So anybody that thinks I'm trying to skate over like the stop outs, there are stop outs. Only a fool would think that they have something that is not going to stop out. And if anybody tells you they have something that is not going to stop out, well, first they're lying. And if they're charging you money for it, well, I would just run. This is a stop out right here. This is a stop out right here. This is a stop out right here. Right? You're going to have them. They happen in every platform. In every trading platform, everything has them. And when I show this spreadsheet, this isn't stuff that I just dreamed up. This is stuff that I did in front of a room full of people. And I can tell you exactly what my trades were today. I ended up with 144 ticks on the NQ this morning, 40 on the Russell, minus 20 on the YM, and break even on the S. And I can tell you exactly what my trades were. On the NQ, my first trade was 16. I went from 16 to 64 to 112 to 128 to 138 to 180, and then down to 144. So I stopped out on my last NQ trade. The Russell, I went from 20 to 30 to 40. The ES, I had 2 break-evens. The YM, I went to minus 25 to minus 20. And that was my morning trading. Alright, 17 trades. There were some break-evens in there that I didn't say, that I didn't cover, but those are all the trades that actually made a difference. And this is what I've been doing every day for years and years. Alright, if you've never seen me do this, then go to mytradingiq.com and take a trial there. If you want one-on-one training, go to mytradingiq.com and take a trial there. Or just ask me questions in here and I'll cover it here right now in a meeting like this. Right? Because it was one of our fellas who's overseas asked me a question about stop management. And that is kind of what I was saying about this right here. The stop up here, this is based upon the prior bar, either the bar that got you into the trade or the prior bar, the bar right before it, depending which is lower. Okay? That's what this stop is based on. Is that always the best stop to use? Well, no, but it's a stop that I can program, that I can write in a program that'll say this is what you should do. Okay? And it's something that's easy to see, it's easy to understand, and it's easy to apply. So, what stop do I use? They're right here. And I put this in last week's, in the email that goes out to everybody that registered for last week's meeting, whether you attended or not. This was in there. This is the stop. This is the stop that I use for the bars that I use. These are the stops. Now, I did also cover last week, and I'll cover it again. The larger the bar size, like I was showing. Let me do this. Do this. And I'll do this. Go on the ES. Go to the ES. Let's make it an NQ. Okay. Make it an NQ and NQZ, and we'll do 100 range NQ. Okay. Now I know I said this last week, or I think I said it last week, or I meant to say it last week. Anyway, what I'm getting at here, if you look at these, like a 4 range, no, I'm sorry, yeah, an 8 range has, I'm sorry, a 4 range has an 8 stop, so the stop is twice the bar size. A 7 range has a 10 stop, so that's like, almost 50%. It's like 40-something% bar size. An 11 range has a 15 stop. That's like 40% the bar size. All right, even less than that. That's like 30-something% the bar size. A 15 range has a 20. That is a 20% stop. A 19 has a 25. That is like a 17%. A 31 has a 36. That's getting closer to 10. 10 to 15, 10 to 16. What I'm talking about is the percentage of the bar size extra that the stop is. Alright, that's what I'm talking about. So the bigger the bar, the smaller the stop with respect to the bar size. So like 100 range, this is what I'm really getting at. 100 range bar like this, I'd use 110 stop. So the bar length plus 10 ticks. That's 10% more than the bar size. That's what I'm trying to get to. Okay? And if you're going to do this with the 100 range thing, now you can use this just like this. Now this meeting, the basis of this meeting was going to be about the TV Trades range trigger. Now the way that I have it programmed, it's programmed to give you the snipes when you have certain things come together all at once. It's not just coming out of the oversold. Otherwise you'd have one right there, you'd have one right there, you'd have one right there. Well, you do have one there, you'd have one there, you'd have one here. It's not just coming out of the overbought, the oversold. There's some other things that go into the formula that make it a higher probability trade setup. But you can just look at it coming out of the overbought, the oversold. When the background is the right color, you can just look at that. When the background is the right color, you're in a longer term uptrend if it's blue. And when it's red, if the background is red, you're in a longer term downtrend. With 100 range, you're not going to get a lot of waffling around going sideways when it comes out of the overbought, the oversold. All right, it's usually going to be the pivot bar. If it's going to work, it's usually going to be the pivot bar. All right, if it's not going to work, like this guy right here, that would have stopped you out. You'd have been minus 110 ticks on that one. If it's not going to work, you're going to know in 1 bar or 2 bars. All right, but usually if it's going to work, it's going to work, and you're going to get your stop to break even. Okay. The bias with this right now, I don't think the bias is on. I think the bias is off right now. Yeah, the bias is off. But you can put the bias on. The bias is gonna right now. I don't know what the bias would do if I put it on. But when you're talking about a larger time frame, the bias isn't gonna have as big of an effect as it is on a smaller time frame. Because on a larger one, the bias is gonna be like one big long line. Right. So this is 100 range. So on a smaller time frame, that bias is going to have more of an effect because the smaller time frame is going to bounce up and down a lot more. But I want to go over this stuff because this is important that you understand all this and that you get this part of it, right? the TV Trades range trigger is one of the best things I've ever created. Really, it is. And and there was a comment that a person felt like they were in a beta with what I'm doing. And if you're going to be doing anything that I've created, you're always going to be in a beta because I'm always looking to improve things. Always. All right? I'm not going to stop trying to make things better. And I make money trading. The money that you guys pay for me to show you this stuff is nothing compared to what I make in trading. It's nothing. And I actually get something out of helping you guys. It makes me feel good when I help you guys. And I can change you guys' lives completely. If you guys figure this out, it'll change your life. It will absolutely change your life. And those of you guys that figure it out, and there are a bunch of you guys that have figured it out, that are using it, and it is changing lives. That's a great feeling. And I'm not going to stop because I trade for a living. So I'm going to keep trying to make things better. And when I make it better for me, I make it better for you. And so you're always going to be in some sort of a beta because I'm always going to show you the new things, the new shiny thing that I'm making more money with. Okay? If you find something, that that is working for you, then just don't upgrade or don't change to the new thing that I create. Don't use the new shiny thing. I know that I have guys. Let me show you this. I think it's on both of these pages, but let's go to this one. Right, this guy right here. The fellow that got that is using a mix of things. Right, he's not just using TV Trades. He's using TV Trades, but he's not just using TV Trades. But he's using something that works for him. So, when I came up with the TV Trades range trigger, I actually spoke to him 2 weeks ago, I think. And when I came up with the TV Trades range trigger, we were going through what he's doing and seeing if I could improve upon what he's doing with the things that he's using. And I think I was able to help him with some things, more of the psychological stuff than anything else. But if you got something that's working, don't change. If you got something that's working, then let it work. Execute your edge over and over and over and over and over and over, and then that's all you need. We have one guy that signed on with me 2011, I think, and I talk to him like once a year, and he he trades. Well, he could trade for a living if he wants to, but he's got it worked out. So with his employer, he's got it worked into his actual contract with his employer, and he trades the first 2 hours of every day. It's built into his contract. He'll go to work, but he's got to be able to trade at work for those 2 hours, and he makes enough money trading to not have to work, but he wants to work. And so he goes and buys his cars and houses and everything else with the money that he's making from trading while he's still doing his job. So people do things different ways. Some people just want to trade for a couple hours a day and that's it, and that's what he does. But he has a goal that he wants to achieve every day, and his goal is actually like 3 times my goal, and he gets it every day. And he's not using TV Trades so much. That particular guy, Dave, he's not using TV Trades at all, as a matter of fact. He's using some other stuff, but it's using just like TV Trades. But he's got the mindset where you're going in, you get your goal for the day, achieve what you want to achieve, and then do the rest of your life. That's where you really got to be. Alright, so I'm now 34 minutes into this, and I want to show you guys this. Alright, I did this thing last night with Chris, and this is what it was. It was on a QQQ 250 range, and is this right? Was this? This is today. Well, I did this yesterday. Why is this saying today? Okay, that's all good. All right, that makes sense. All right, so let me show you. I made a screenshot of it last night when we were talking about it. I'll explain to you what we're talking about, because this goes to the whole the range trigger thing. And this James see, Wayne said he's retired and he just wants to learn more, and that's what I'm helping him with. James, let me show you. Last night, QQQ puts, this was it right here. Oops, that's not it. That's part of it, but this was it right here. So this is what this looked like last night. Okay, and at the time, what I was looking at, this is the QQQ, and when, let's just look at this. Oops, not that. Let's look at this for a second. We'll just analyze this piece right here with the information that we have using the range trigger. Okay, when the range trigger comes out of the overbought like this, it's time to start looking for a trade. If you're with the trend, if you are with the trend. So if I had the TV trades all the way on this, if I had like the range sniper on here or just regular TV trades, you'd have the background color, and the background color right here would be red. So if this comes through the overbought like that and the background color is red, then that's a good opportunity to enter. Now, whenever you enter a trade, right, and this is just price action stuff, right? Whenever you enter a trade, the minimum that it should do is get to the prior swing high or low to continue the trend, all right? So in this case right here, what I was saying to Chris last night when we did this is right here's a great point to entry, and the minimum that I expect it to get to is the swing low right here, which is 77.50. So 77.50s. If I look at the 478 puts, if it gets down to the swing low, that's going to put that in the money. And I figured it would probably get there today. I figured it would probably get there at the open today, or pretty close to the open today. And at the time, these were at 302. Now, I created this last night, but when I made this screenshot last night, these were at 302, and I said put a target of 4 on that. Right? Because when it gets down here, I expect it's going to get to $4. And don't be greedy when you're trading options. Don't be greedy. I mean, Chris was she's saying, what if I want to let it run and run? Because, you see all these things all the time about people that are making all kinds of money. They're making 1,000% on this one, 500% on that one. They're doing it again and again and again, day after day after day. And, yeah. Maybe they are. Maybe they are. I mean, who am I to say no? But I'm going to say this. If you could make 25 to 30, 40% day after day after day, then that's all you need to be able to do. It's not the quick road to riches, but I never claimed to have a quick road to riches. But it's a consistent road to riches, and that's what I do have. And so if you see something like this at the end of the day, like I want to do this in a few minutes here. I want to look at a couple of equities and see if we have the same situation so we can make screenshots of it and we can address it again in next week's meeting. All right? But we'll look at this right here where we have this cross down out of the overbought. The trend is down. I was anticipating it's going to get down to this level. At a minimum, it's going to get down to that level, and it would go to $4. It would go from 302 to 4. Well, it opened up at like 296 or something like that. And hold it. Crap. It opened up at 296. Hang on, I got to find the right screenshot. And here it is. And if it wasn't just a little while later, it was $4 right there. That was this morning at 9:39 this morning. $4. So that happens over and over and over and over again. So if you understand what you're looking for with the range trigger down here, what it's telling you based upon the trend that you're in, then you can use that to get great entries on so many different things. Now, this right here, you see this right here is called a ribbon, and you actually have a version of that, a minimal version of that. That's part of, it's actually part of the sniper. If you put the sniper on, and right here, the snipe filter, you change that to 777, like that. Change that to 777, then you have it. Okay, and what you're looking for, you have to be able to see all 4 lines. If you see all 4 lines and it's going up, you're in an uptrend. If you see all 4 lines and it's going down, you're in a downtrend. Okay, and you can spread it out so you can see it a little clearer. But that's the idea. All right. Now, you don't really need that because you can see right here when all 4 lines start to become visible, the background color is the right way. So you just have the background color. It's a lot easier for you guys. But that's it. So yeah, the thing to look for on this kind of thing, Wayne, like right now, all right, we didn't put in a lower swing, so not really trending right here. You don't see all 4 lines in there, so it's not a great trade right now. But if we go back and look at some of the other things, some other things, you might have a better trade opportunity right now. Like, let's look at the SPY. The SPY is probably just like the QQQ, but let's just look at the SPY right now and see what that looks like. Okay, so the SPY gave this opportunity here this morning, and it hasn't given you anything else since. The ribbon's all crunched up, so there's nothing there that you're going to do. But let's look at, like, Tesla. So Tesla, right here, the ribbon's still crunched up. It's pretty close to what you want, but the ribbon's the wrong way. This is a bearish ribbon right here, not a bullish ribbon. But it's pretty close to what you want. Not exactly what you want. You're in a downtrend, not an uptrend. If it were like this right here at the end of the session, that's what I'm looking for. So let's go look at something else. Well, this is on a 250, right? So the 250 is probably a lot for this. If we drop down to like 100 range, because it's this isn't 500 bucks. So we drop down to 100 range, we might see some opportunity in here. Nope, we're still not getting it. But that's Tesla. Let's look at Intel. Intel is where we did last week's. We ended last week's meeting with Intel. Okay, so right now Intel is actually at a good spot. It's not going to give you anything right now because we're running out of time. But right here we're oversold, and it's blue background. So let's just take a look at this. Let's take a look at this right now. Let me get my Schwab account here somewhere if I can find it. And let me get the Intel thing. Here it is. Let me log back in. Hang on a second. Let me log back in. Text me. Hang on. Text it to that number. Send that. And 183287. It helps me to say it out loud. Alright. So it's 342. And here we go. We're going to look at Intel. Okay, let me go to trade chains. And here's Intel. Alright, so let's look at well, I'm going to look at Fridays. It kind of sucks that we're looking at Fridays right now, but we'll still look at Fridays. I don't think that this is going to do too well, but let's just look at the Fridays stuff right here for Intel. Okay, it expires the day after tomorrow. So you're not paying much for time, but it's going to lose value quickly. So you got to have something that's a little closer to the money, because it's anything farther away from the money is never going to gain anything. So what we're looking at is the prior swing high is right here at 24.72, right? So following my logic that I was saying just a few minutes ago, when you're in the oversold, you're anticipating it's going to come out of the oversold, and it's going to get to the prior swing high, right? So what you would look for here, you won't do it right now because you want it to actually come out of the oversold before you take the trade. But what you would look for is if this came out of the oversold, then you would look for a strike price that is just a little below the prior swing high. All right, so you'd be looking at 24s, 24 calls. If it came out of the oversold, you'd be looking at 24 calls. And they're Friday's expiration, so they're only $6 right now. But that's what I'd be looking for. If we came out of the oversold, I'd be looking for 24 calls. Now, whatever the price is, how close it is to that when it happens, this is 100 range, so it's going to be $1 closer than where it is. So, it's going to be a lot more, but that's what I would look for. All right, does that make sense? Do you understand that? Wait, how is DS doing today in terms of the trade signals? Well, let me go look. I don't know. And what time frame are you looking at on the OS? Wait, you got to tell me what time frame you're looking at. Okay. But as far as the options go, you guys understand this, right? I kind of wanted to pick one out that we could look at and use. Tesla's not one. Let's try Apple. Nope. Apple's almost there. If Apple were to drop down out of the overbought right here, It's in a blue background, but if it were to drop down out of the overbought right here, then Apple would be something that I would consider shorting or buying puts on. Okay. But that's what you're looking for. You're just looking for it to get in the overbought like this, and when it comes out, that's when you can set it so that it lets you know when it comes out. I'll show you how to do that. And we'll look at the ES in just a minute. Okay? We'll look at the ES in just a minute. And next, yeah, you can absolutely look at next week's expiration for more time if you want to. So you're not wasting time with the money, but then you're wasting time over the weekend. And over the weekend can have significant impact one way or the other. I mean, the maximum you're going to risk is what it costs to get into the option. But if you put it on and you have you're going to hold it over the weekend. Sometimes over the weekend you might want to bump up those targets that you put on it because stuff could happen over the weekend that's really going to affect it when it opens up on Monday morning. Just saying. So, why would you look for puts for the Apple with the blue background? Well, what I was saying here, at the time on this bar right here, right? If this bar were to close down, you could see all 4 lines in the ribbon, then you'd be looking for a put. But now it's turning to blue, so you wouldn't really be looking for a put in here. Okay, but if you were looking for a put, the swing low is right here, so you'd be looking for something above the swing low, so it would put you in the money. So you'd be looking for like 223s, 224s puts. So it would put you in the money when you get to the swing low because, if it pops out of here, you anticipate that it is going to get to that prior swing high or low. That's the minimum that you anticipate. Okay? Make sense? Alright, so let's go look at the ES really quick. That was a question here. Now I switched to the NQ100 range, but let's look at the ES. I'll change it back to an ES. And you didn't tell me, Obey, what time frame you wanted to look at. ESZ. And this is what the ES looks like on 100 range. Alright, today. But I wouldn't do the S on 100 range. If I can do the S on a larger time frame, the 31 range, something like this would be enough. But what I do on the S in the morning, I use a 7 range. It's got enough volatility to give you some decent trades with a 7 range. And today, again, my thing is I get in there and I get the goal for the day. And what I recommend to people is get in there, get the goal for the day, and stop trading. That's what I recommend to people. So the ES trades that I took today, you see these yellow and blue and red arrows are the ones where I took ES trades. So today I just took 2 break-even trades on the ES. You can see right here at the open, it started out with a great trade right there in the pre-market, a great trade right there, a great trade there, and there, and there. Any one of those would have gotten me the goal for the day, and I'd have been done. Okay? Yeah, I usually use the 7 range, and this is what it looks like on the 7 range. So if I had done this on the 7 range, I'd have been done trading because I'd had my goal for the day early on. By 9:45, I'd have been done trading. Okay, and that's what it looks like on the ES. Now, I was going to show you guys what I do actually use in the morning when I trade, right, to get the results for the spreadsheet. Like yesterday, I was up $2,300 a contract in the morning session. Today, I was up $820 a contract in the morning session. And this is all of last month. And I'll show you exactly what I used doing that. All right. I used the TV Trades range trigger, and I used, well, I'll put this on because it's those lines that you saw, but it's basically the same thing. And that's all I used. When you can see the lines, and you can see all 4 lines in this, and you come out of the overbought, and you're going down, you take the trade. You can see all 4 lines in this, and you come out of the oversold, you're going up, you take the trade. It's as simple as that. All right. So these are all tools that you have as part of TV Trades. Now, I automated everything to give you indications of when to get in, when to get out. Not so much when to get out, when to get in. Well, actually, even when to get out, when to look for the targets. But there's, there's the fully automated. Well, that's not fully automated. That's like semi-automatic trading. Like, if you have a weapon, you got to pull the trigger multiple times to a semi-automatic. You pull the trigger every time you pull the trigger. You can pull it multiple times in a row, and it's gonna fire every time you do. With an automatic, you just pull it and hold it, and it's gonna fire automatically. With this, it helps to understand what to expect out of a trade. All right, and the very minimum that you should expect out of every trade is that it's going to get from wherever you enter to the prior swing high. wherever you enter going short to the prior swing low. All right. That's what you should expect at a minimum out of every trade. And if you're looking at options, if you're trading options and you're trading it on something, the TIQ, not the context. It's basically like the ribbon, Wayne. But he threw me off. The 7 range, the 15 range, the 19 range, the 31 range, 100 range. I totally lost track of my thought right there. Anyway, it is now 3:51. So what I was saying is, whenever you get into a trade, that's what I was kind of going down that road. Every trade that you take, the markets always do the same thing, and I always say this, right? Every time the markets go up, they pull back, and they go up again, if they're going to continue the trend. All right. Every time they do that, they go up, they pull back, they go up, they pull back, they go up, they pull back, they go up, until they don't continue the trend. Right? They go up, they pull back, and right in here where it pulls back deeper than the prior swing, it starts to weaken the trend, right? Then it goes up, and it goes up just a little bit, and then it pulls back just a little bit. It's starting to get into some chop right here at the end. All right? But in a good trend, it's going to go up, it's going to retrace about 50%, it'll go up another leg length, the same leg length that you had to begin with. It'll go up another one of those, which is right here. Then it'll pull back. In a strong trend, you won't have a deep pullback. Your pullback will be smaller than the one before it, and your leg length will be equal to the one before it. So this leg length from here to here will repeat here to here, will repeat again here to here. Okay, and then when it loses strength, this pullback becomes deeper. It exceeds the prior swing low when it loses strength. Right, and then usually you're going to change direction. This was just a big whip right here. But that's how the markets always work, right? That's how it always works. And thanks, Rico. That's how they always work. And so I work with that. The indicators work with that. The whole idea is to get you in, with the sniper particularly, is to get you in on the pullback like this, get you in these spots, so that you can take advantage of the move up or the move down. Get you in at this spot here, or this spot here, or this spot right here. So you can take advantage of the move down. And you can see all that down here in the range trigger, right? You pull back there, you pull back there, you pull back here, you pull back here, you pull back here, you pull back here. The thing you have to be cognizant of is how deep you're pulling back with respect to the trend. Okay? And the software, when you put the actual sniper on there, the software does take that into account. Okay? If the actual trend starts to change, you're gonna stop getting snipes. Right? It's gonna stop giving it to you when the trend actually changes. That's the idea. So if you have a trade like this one right here, for instance, and this one stops out, don't take the one after it. It might give you one right after, but don't take that one right after it. Every trade that you take has to continue the trend. Right? If it does not continue the trend, you're not in a trend. So don't take the trade right after it. Okay? Alright, so the options. Yeah, we're getting to 4 o'clock. I have 6 minutes left. Let's see if we can find something else here that's got that going on. What am I have that thing on. Okay, let me go here. And we'll see if we can find some other symbol here that is set up to give us something good right now. Over here on this side, hang on, I'm logged in as this guy. Let me log in as the other one. Sign out of this, and sign into this, and that guy, and sign in, and see what that number is. 502085. Okay. So you see I have all these things set to give me alerts over here. If I turn them on. They're all turned off. I turn them all off. But what these are going to give me alerts on is when it goes into the overbought or oversold. So like Baba. Let's look at Baba. Now Apple is almost in a place right here to give us a trade, but not quite. Let's look at Baba. Baba. And come on, load up. Alright. That's not either. The ribbon's not right. So let's look at MU. Micron. And that's not ready either. See, a few minutes ago it might have been right in here or back here. Intel we already did. Let's look at NVIDIA. NVDA. Nope. What else did I have going over here? I had Apple, NVDA. Right, those are all the ones that I had over there. But if we look in here, let's see what other ones I have going over here. Let's look at Walmart. WMT. Is that right? Yeah, Walmart. Alright, so Walmart a few minutes ago was, now Walmart is on 100 range. 100 range is probably big for this. Let's go down to a 50 range. We might have something on a 50 range for Walmart. Almost. Almost, darn it. It triggered back here. I mean, you could still look at it, but it's looking kind of weak right now. You know, it should go from the oversold into the overbought. It shouldn't go back and forth like this. But you know what I'd be looking for, right? Does it make sense to you what you'd be looking for right here? You would be looking for a call option that you'd be looking at like 8150 calls, or maybe 81 calls. That's what you'd be looking for. All right, and you'd be anticipating that it's going to get up to that tomorrow. This isn't ideal right here. It's pretty close. Like right here, if you would have done it right here, that would have been a valid consideration right here to do it right here. I mean, you could still probably do it, but the market got weak right here. You see how you didn't put in a higher swing from this last move right here, did not put in a higher swing. The market got weak right here. So this isn't looking like a great opportunity. But let's look at something else. We might still be able to find something here, and hopefully we will, but I don't know. Lake's not going to do it. I'm just looking down here at the slingshot to see if the slingshot's right, and Lake's not going to do it. Verizon, let's go to VZ. You guys see what I'm looking for though, right? See, we're in an uptrend here, so you'd want to come out of the oversold, like right here when it came out of the oversold. This was a couple days ago, but when it came out of the oversold, you would have been looking at call options right there, right? 45 calls, maybe 44 calls when it was down here. Make sense? Steel ticker X. X? Just X? United States Steel. Here it is. Alright. Almost again. It's in a nice downtrend right here, and it gave great indications in the downtrend, but it's just not there right now. Not on the 50 range. Now this is a pretty low price stock. You might be able to do that for a quarter here. Nope. See, every one of these is 50 cents. Every bar is 50 cents when it's like this. Almost. You see what I'm trying to find though, right? And so you can set up these alerts over here to let you know that is actually an alert that you have. This yellow thing right here. It's part of the sniper. You can go in here on the sniper like this. Go to alert and go to sniper, and this one right here, sniper long next up close, sniper short next down close. That is the yellow arrow. All right. So the sniper short next down close is the yellow arrow pointing down. That's going to tell you when price goes into the overbought, you're going to get that alert. Alright, and you can set that alert up so it goes to your phone, it goes wherever you want it to go. You can set that alert up so it does all that. Okay. I think I did Microsoft. I'll go check it out though again and see. Let's try it. MSFT. I thought I did. I know I read it. Maybe I didn't do it. Let's see. I'm hoping we have one. See, this isn't in a trend. You need to be in an uptrend. So there's nothing here right now, but you can set these things up so that you'll get an alert when it gets to that point, and then you'll be able to come and look at it using the TV Trades range trigger to position yourself to take an option trade if you want to, or to jump in the market if you want to do that. You know, you can, whatever you want to do, you can do it. You can wait for the signals. You know, if you're not paying attention to the markets, the signals are there for people who are not able to sit there and watch the markets. The signals are there for that. All right, they're there for you to be able to say, all right, I just want to know when it gets into the oversold, so I'll be ready to take a trade. I want to know when it actually triggers a trade, so I'll be able to take a trade. That's what the TV trade stuff is all about. To give you a notice without you having to look at the markets. That's what the TV trade stuff is all about. But yeah, it's 4 o'clock. But you can set it up so it'll give you all this other information. Okay. I mean, you can set this up so you don't have to have the sniper on, because if you just have the regular TV trades on, I don't think I created the alert. I don't remember. I know I added the yellow arrows to this right in here, the trigger alert notice, but I don't remember if I added the alert value to it. I might have. Let's see. It'd be just regular TV trades in here. Oh, I did. Okay. So you could use it. You could do that with this too. Right, with just regular TV trades if you wanted to. Now, one other thing really quick about the regular TV trades for anybody that's watching this after the fact. The regular TV trades, the blue and the red, by default, you're only going to have the blue on, right? By default, you're only going to have long trades. You have to come in here and actually turn the shorts on if you want. And that's where this bias is going to come in handy to get rid of things like this right here. Right? That's where the bias is going to come in handy. That's only going to happen when the color changes. Right? When the background color changes. Those are the only times you're going to get those arrows, the blue and the red ones. It's only going to happen on a background color change. Okay. I want to make sure I cover everything that I had and that everybody had asked me about. Martin, you had asked me about the one-on-one training. I think I covered that. The stops, how to stay in the trade a little bit better when you get into it, because what he was saying was the trades more often than not end up going in the direction that you expect them to go in, but sometimes it pulls out. It pulls just a little beyond the stop, and then it goes. How do you get around that? But I told you the way that I use stops. Right? I explained the way that the stops are calculated, these stops are calculated, and the way that I use stops. Right? The bigger the time frame, the more likely the bar that is the trigger bar is going to be the pivot bar, particularly with the sniper. The aggressive sniper is almost never going to be the pivot bar. Right? It's going to be the bar after. Right? There's a reason for that. It's almost never going to be the pivot bar. It'll almost always be the bar after the pivot bar. If it's going to be anywhere near the pivot bar, it'll be the bar after. Right? It's just the way I programmed it. The aggressive sniper. You see how many more trades there are there with that aggressive sniper. There's a ton of them. Of course, this is over a month, but there's still a ton of them. Let me see. I want to make sure I answered all the questions. I think I did. And as far as skipping over the stop outs, I don't intentionally skip over any stop outs. You know, when I do stuff live in front of people every day, I do it live in front of people. And if I stop out, I stop out. You know, and they see I stop out, and that goes into the total calculations. I don't just enter in the winners. You know, I absolutely do not just enter in the winners. I would never have a negative number in here if I only entered in the winners. Right? And I think last month we ended negative on the YM, right? We're down $635 on the YM at the end of the month last month. Now we're up 13,370 on the NQ, but we were down 635 on the YM. We're up 1,800 on the ES last month and 1,700 on the Russell. That is with one contract. All that is with one contract. And so far this month, we are positive everywhere. We're up 200 on the YM, 290 on the Russell, 2360 on the NQ, and 287 on the ES so far this month. Again, that's with one contract. Right? And these numbers over here are the hourly numbers down here. That is based upon how long from the moment that I start talking in the room until I get the goal for the day. Alright? How many minutes that is. That's what it is. Alright? It's not based on the time that I'm in a trade or anything like that. That'd be crazy to try to calculate the amount of time that I'm actually in a trade. That'd be crazy to do. It's the amount of time that I take to get the goal for the day in minutes. Right? And these numbers right here, you know, all the numbers that you see are gross numbers. These numbers would be net numbers for all the trades taken in the room if you had an $8 commission, this would be the net number so far this month. If you had a $5 commission, this would be the net number so far this month. Now, when I created this thing, I started creating this whole spreadsheet back in 2013. And back then, places did have an $8 commission and a $5 commission. As a matter of fact, they weren't that uncommon. That's why I used those two, because most people were somewhere in between there. Now the rates are much lower than that. Much lower. You know, my rates are much lower than that. Much lower than that. Fractions of the lower one. But the spreadsheet is, it's a living document, and it's been this way for, over a decade. So I'm not going to change all that. All right, that is it. All right, again, that spreadsheet is not TV trades results. That spreadsheet is the results of what I do in the room, and I showed you what I do in the room, how I do what I do in the room. So you can apply that to your own trading if you want to. You have all the tools here with TV trades. You don't have all the tools that we have in the room, but you have all the tools that you need to do what I do in the room. And that's it. All right, so I'm gonna wrap it up. And if anybody has any questions, if anybody comes up with any questions after the fact, Rico, what on the 50 range on X? Yeah, sometimes, like seconds a trade, sometimes a minute. Okay, that was before. Okay. All right. Yeah, I know. Well, again, that was just the first time that I ever really showed the spreadsheet was just so you guys can see that you can do this. That it can be done. All right, it's something that's very feasible. It's something that you can do, and it's not that hard to do. You just got to get your head around trusting what you're doing. Basically, is what you have to do, and that's it. All right, so with that, I'm going to wrap this meeting up. Thank you all for asking all the questions that you did, and hopefully I answered everybody's questions in my sheet. Line 4620. I don't know what those are. 4620. These right here. Oh yeah. Well, I got my goal for the day every day so far this year. I've now gone 99 days since, those are business days, by the way. 99 days since my last non-green day, and a green day means I got the goal for the day and I ended positive. I've gone 346 business days since my last red day. So the last day that I didn't get the goal for the day and I ended negative was in May of 2023, I think. You just want to be consistently profitable, day after day after day after day, and that's what I do. That's what I teach, and that's what I give to you guys. What you have in here, what you have with these tools, with these indications, you should be able to be profitable every single day. Every single day. And people's idea of profitable may be different. Some people may think making $20 is profitable, and some people may think you got to make $1,000 to be profitable. But you got to trust the system. All right. It's not something that I threw together in like 10 minutes. I've been doing this for a really long time, and this is actually the culmination of 30 years of stuff. So anyway, I really am going to wrap it up. Let me shut the recording off before I do the next part, because if I do that, then it's messed up. Here, let's stop the recording right now.